to the latest update from the Western Producer Markets Desk. I'm Phil Franz-Warkentin, and I'm joined live today with Jerry Klassen of Resilient Capital to talk about some of the highlights of acreage estimates from Statistics Canada and the U.S. Department of Agriculture released today. Welcome here, Jerry.
Thanks, Phil.
So StatCan placed this year's canola area at a record 23.4 million acres. That's up by 1.8 million on the year. What do you think's behind this acreage increase, and what will it mean for markets down the road?
Well, I think that, it's very clear that farmers responded to the returns per acre. Canola had favorable returns per acre after we had the resumption of trade with China. We're expanding the domestic crush pace every year as well. So I think farmers have a lot of marketing options, and and like I said, the favorable returns per acre resulted in the increase in acreage. Again, maybe on the outskirts of that, we can say that the farmers also looked at the longer term weather forecast, which was a bit favorable as well. For June and July, it was a bit, there were some cooler forecasts, which usually result in above average yields. And I think that's the response we're getting from the country now as well. I think the trade's looking for a crop size, in the range of, 23.5 to 24 million tons, which is a record production. But I think that's going to put some pressure on the basis during the fall, during harvest. But overall, with the expanding crush pace and the favorable crush margins, you're not going to see much slippage in the canola market, through that harvest period. And then we probably see, a seasonal rally again later in the winter and over the spring. Through the spring, even longer term, the market needs to, maintain acreage at these levels for next year as well, for 2028 or for 2027. So, overall, a pretty positive market outlook for canola, and farmers responded accordingly.
Okay, so the production may be up, but there's still, prices can still be supported with that strong demand out there.
That's correct.
Yeah.
Very strong demand.
So on the other side, canola's up, but wheat area was down by nearly 6% at 25.3 million acres. And the USDA also put out their acreage numbers today, calling for a 6% drop in U.S. wheat area. So those smaller Canadian and U.S. wheat crops both below most trade guesses. And the futures reacted, showing some strength today. What's your take on these smaller North American wheat crops?
Well, the spring wheat acreage was, the acreage was marginally lower than what we anticipated earlier in March, and was a little bit lower than what I was estimating as well. But I think when you look at the overall picture, I think that we have very good conditions in Western Canada. We're factoring in similar acreage to last year, maybe even a bit higher. And so I think the spring wheat crop in Canada could reach around 27.8 to 29 million tons, which is only 300,000 tons less than last year. And when farmers are looking at wheat, I think wheat is a pretty staple crop. We don't see that much of a change from year to year. And so I think maybe we were a bit presumptuous thinking that the wheat acres would be up sharply. But I think when you look at it overall, the wheat acres, they, in the past 10 years, they don't really alter, or vary that much. And we're just a little bit on the low side, should I say, of the 10-year average, overall. Now in the U.S., the spring wheat acres are down from last year as well. But again, very good conditions in North Dakota, Minnesota, and in Montana, similar conditions as Western Canada. The hard red winter wheat acreage was a surprise to the trade. And I think the lower soft red winter wheat acreage was also a surprise. So we have a situation in the U.S. where the market needs to ration demand next fall. We're not going to really see that rationing through the harvest right now as farmers sell a large volume at harvest. But after that harvest is completed, the U.S. market needs to trade above world values given our tighter supply in North America, overall. So the spring wheat, our larger spring wheat crop, we're going to satisfy some of that demand in the U.S. and some of that world demand as well for hard red winter. And I think in Europe, they're contending with drought-like conditions in France and Germany. And I don't think the markets, responded to that situation, and should I say, at this time. I think that's still going to come, later in August and September, October as well. So we have some problems developing in Europe. We have a sharp year-over-year increase in production expected for Australia and Argentina. So, the wheat, we have, a large, should I say, fairly good yields in Western Canada. We're going to have a good crop, but there's strong demand for wheat. So I'm pretty optimistic on this wheat market as well.
Okay. And I know of the wheat, before we started recording, you mentioned durum. Of the wheat numbers, I see the Canadian durums lower on the year. What are you thinking on durum and these acreage numbers?
Well, I think the function of the durum market was to discourage acreage, and we did see a little bit of that in Western Canada. I thought the durum acreage would be significantly lower than even what we had here on StatsCan this morning. But a durum, acreage of 5.9 million, that's still, given our stock situation and the potential crop out there, when we look at total supplies, the carry out from 25-26 and the upcoming crop, the supplies are going to be sharply higher than last year. So if you thought the durum situation was burdensome last year, it's going to be even worse this year. And so the market will, probably trade at a discount to spring wheat throughout the crop year. We're going to see that durum, milling durum and low quality durum trade into the domestic feed market as well. And so the market needs to encourage demand through lower prices. And, that's probably the story on durum. We have a good crop developing in the U.S. as well. The European Mediterranean harvest is just wrapping up. We're going to go into the main Italian harvest, here, next week or in the next week or so. And, the Italian crop is in pretty good shape as well. And so we have a durum crop in Europe, about 8 million tons, which is about the same as last year. And then more importantly, we have pretty good crops in Turkey and North Africa. So we have a larger supply in North America. We have, a steady crop in Europe, but we have lower demand from North Africa. And so the crop, our export movement is really going to struggle next year.
Okay. Does anything else stand out to you in today's acreage numbers? I see the Canadian barley's up and oats are down. The oats seems rather low. What's your take on those crops?
Yeah, the barley acreage came in, was up 9%. The barley crop, similar to the wheat, is developing under favorable conditions. But barley, our carry out from 25-26 is, historically tight. And we're expecting very strong demand from China next year due to the smaller Australian crop. And so we're going to see very strong export demand for barley. We had relatively good prices this last year, and I think, similar to canola, farmers responded accordingly. They have many outlets, should I say, the export side and of course the domestic feed market. They can always, turn that barley crop into cash fairly quickly. And so the barley demand is very strong for next year, both domestically and on the export side. And, farmers are fairly bullish on barley, so I think that contributed to the larger acreage. Now, on the oats, the oat acreage was down about 15% from last year. And I think that's actually a bullish story for oats. In the U.S., the USDA report this morning had oat acreage similar to last year. And so with the lower acreage in Canada, we always have pretty good yields on oats, regardless of the conditions. And, we're going to see very strong demand from the U.S. next year. and with the smaller Canadian crop, that should result in higher prices. So I think farmers can be pretty optimistic with oats.
Okay. Finally, anything else stand out? Any take on the pulses? I think they were lentils and peas are both down on the year.
Yeah, the lentil acreage, was down about 10%. Pea acreage down about, uh, you know, 15 or 12% to 15%, I believe. I think the market needed to discourage acreage on those crops, and it did not do enough. I think with the yield projections now, we're going to have some pretty big supplies of lentils and peas, and that will keep those prices under pressure for the 26-27 crop year. I don't think farmers can expect too much upside. With lentils especially, it's, can you move them sometimes when supplies get so burdensome, and that's going to be the situation on lentils. And the peas is a little bit more optimistic with the export program, but still there's a pretty good supply of peas coming at us, and the market don't, farmers shouldn't expect too much upside on the peas or the lentils.
Yeah, I think there's pretty large old crop ending stocks forecasts on both of those, right?
Well, that's the key. You have to take it when you can look at the acreage in the upcoming crop, but you also have to take in the carry-in stocks. And when you add those two together, even with the smaller acreage, supplies are above last year. And so, our starting point, that's a good point, Phil. You have to look at the starting point, and the total supply at the beginning of 26-27 for both peas and lentils will be above year ago levels. So if you, again, similar to durum, if you thought the supply situation was burdensome last year, it's going to be a similar story, if not worse, this year.
Yeah. All right. Well, I think we'll leave it at that then, Jerry. We have the acreage numbers, the crops are in the ground, and now we're just waiting on the weather, I guess, to see how it plays out over the next couple months.
Yeah, hopefully it's, we actually need a little bit more heat, but for the canola, it's going to be pretty optimal.
Yeah. All right. Well, thanks again, Jerry Klassen of Resilient Capital, for joining the Western Producer Markets Desk, and I'm Phil Franz-Warkentin. And thanks for everyone tuning in.